Hello, everyone, and welcome back. I am sitting down with Brett from Trinity Financial.
Hello, Alyssa.
You and I have been talking a lot this month. We got a lot of good topics in.
Right.
Today, we're doing taxes in retirement. Taxes, I feel like they never go away, do they?
They never will.
All right. So I imagine, obviously, many people have questions when it comes to this. So are Social Security and retired income taxed?
So, yes. So federally, yes.
Yeah.
In Illinois, though, pensions, Social Security,
Okay.
IRA distributions, 401k distributions are not taxed on the state level. So
Okay.
that's something people that when they retire are very excited to learn.
Okay.
Is that that income now is state income tax free. Okay. So the Social Security now, that becomes a different issue from the Fed tax, because now we have to calculate on how much of it's going to be included in the federal taxation.
Right. Interesting. So I guess I know you're kind of talking about what people maybe get excited about, but maybe any tax surprises that catch retirees off guard?
It doesn't catch them off guard. Well, I suppose it does if they don't understand. Again, we don't have time to go into how the calculation on the Social Security tax is.
Yeah.
I wish we could. Because if your gross income is low enough, you don't pay, it's called provisional income. You do not have to include any of your Social Security in your federal taxation. Okay? So think about that. You have pretty much your Social Security is income tax free, okay, for most people. If they make the withdrawals from a 401k, unexpectedly not understanding the impact, because now they just went from being underneath that threshold to this withdrawal, this large withdrawal, whether it was to go on vacation, buy a car, whatever it was. Now they just took their provisional income from here where there was no tax up to here where 85% of their Social Security is included in their federal taxation. That's when they get the huge surprise the following spring when they go to do their taxes.
Got it.
Again, I think that's our responsibility. You've heard me refer to my program a lot.
Yeah.
That's one of the programs or one of the benefits of the program is we are always looking at the provisional income to try to make sure that we're staying, if we can, we want to try to stay as close under that or under the provisional income so that none of your Social Security is taxed at the federal level.
Right, absolutely. So does that program kind of give you ways or ideas maybe to reduce taxes in retirement before it's too late, or how does that all work?
So it's not the, no, it doesn't give ideas.
Okay.
But what it does is allows us to have different classifications of money. So Roth IRA is a huge source of income, because that's income tax free.
All right.
So that doesn't drive up your provisional income, which means your Social Security is not included. And actually, non-qualified money that's sold or at a capital gain can also be tax friendly, depending on the mix of and the total income for married and for single.
Okay.
Because if your income's underneath a certain level, then you don't pay any income tax or any long-term capital gain tax. So it's all a balancing thing. But I mean, I'm not smart enough to do it individually myself, but when we put everything into the program, then we can start to balance that to see the best way to come up with the assets.
Right, yeah, absolutely. So again, sorry if I'm repeating myself, but just to kind of get that information out there, wrap it all up. What should somebody maybe do now to avoid costly mistakes down the road?
So one thing we're really hitting at the workshops is, again, I think with the survivor income for the Social Security, which we talked, I don't know, like 4 weeks ago, I think looking at using IRA money more in the beginning, because of the IRS came out and they said now your required minimum distributions till 73, okay? And if you're not 73 by 2033, then it's age 75. So we may inadvertently be pushing this tax qualified money down the road to only build a larger tax time bomb at the end.
Okay.
Whereas if we use it more in the beginning and balance everything, maybe we can defer some of the Social Security tax or Social Security income, because Social Security income is still the best source of income because 15% of it's income tax free right out the gate.
Right.
So the planning is, yes, I think the sooner you can start to plan for how much income you're going to need and where's it going to come from.
Yeah, absolutely. Plan.
Plan.
All right. Well, thank you, Brett. Again, that's
Thank
all
you.
the time we have for today. But for you watching at home, there's that information about Trinity Insurance and Financial Services on your screen. You can call that number to get more information, or you can go to their website. You can also just visit them at their location if you would
You
like.
can come visit us anytime.
Absolutely. Well, again, thank you so much, Brett, and we will be right back after the break.